To round out this trading week, Mike, thanks for joining us. Ilya should be back next week, assuming New York lets him go. We're here for the rest of this hour. Markets close at 5 Eastern, 4 Central. If you are watching us on the platform, Tasty Trade, on the website, tastylive.com, thanks for joining us. Come over to YouTube. Tell us what you're trading. Mike, I think you're on the chat today, so say hello to Mike Butler here during the show. It's a record high
hello,
close
Mike
for the
Butler.
S&P.
Hello, Dylan. How are you?
Hello, Mike Butler. Very well, very well. Nice to see you. Sorry, you were working there, Chris. I do apologize.
It's a record high close for the S&P 500, although not without a late day sell-off that kind of takes some cream off the top. The NASDAQ likewise closes higher, although not near where it was after the Google earnings yesterday. Tesla struggles on the backside of comments made by Musk during the earnings report. Bonds are able to recover after slightly dipping lower. Metals slightly weaker. We go to the dollar, which is firmer. ECB did not cut rates today, and they said they're on a meeting-to-meeting basis moving forward. So their cutting cycle appears to be finished. Outside of that, Intel earnings are now out here after hours, and they are as mixed can be. They beat technically on the revenue guidance. However, the earnings per share is negative, and we see the share prices are trading slightly higher here right now as we turn to the charts. Mike, I'm assuming you're the earnings play guy here. Great timing for that to go off. You're the earnings play guy here for Intel, I assume, because I'm not trading it. I don't think Dylan is either. You have any view on Intel as we make our way into the show?
I did not place a trade there. I placed a trade in Tesla, just an iron condor there. That's a scratch. Yesterday I did IBM to the downside, and then Google to the upside. I sold it on the open before it sold off. So I literally did the best I could in those three situations. Tesla I still have on, but Intel, I didn't place any trades there. I think Nick sold a put, so if it stays right here, it'll be just fine. But these $20 stocks, they're low priced and there's not much to sell there in terms of premium. So I just stayed away from this one. But yeah, interesting to see it up on the mixed news. I would have assumed it might come down a bit if news wasn't great.
It's not the numbers that drove Tesla lower yesterday, guys. It was Musk commentary. Tesla stock was fine before the earnings call. It seems that Musk is warning, if you take him at his word, that he's warning that the next few quarters could be bad. Period of transition. Ultimately, maybe some of these tax credits going away could hurt the underlying business. Dylan, you, me, Westwater, Ilya, we've all been people who have said fade the noise in Tesla. But this feels like perhaps a different kind of noise now. Elon Musk not being as braggadocious as he usually is. Should we be buying the dip here in Tesla as folks like Dan Ives are saying we should?
100% yes. 100% yes. I mean, I don't know anybody who's ever gone wrong buying the Tesla dip. The obvious caution to my sort of brazen, confidence is that it obviously can go lower. So, whether you buy this dip or whether you wait to see if there's more of a dip in the offing. I mean, the question is, what's a dip, I guess. But in this particular instance, I think that Tesla is always a buy the dip name. And to your point, the dip was not a function of the numbers. It was a function of the guidance, effectively. I mean, listen, from a trading perspective, do you buy the dip? I have no idea. From an investment perspective, is it good to own Tesla? No question, yes. And so I think reflexively, anytime you get a Tesla sell-off, you want to be certainly taking a look. I mean, again, sell some put spreads with some room for error. You don't have to be right on the number there. You can give yourself at least one standard deviation to the downside, and get yourself some duration to sort of let this thing play out.
Mike, I think that's an excellent point. Dylan says go out to the one standard deviation move. The 57 days might be a little bit too rich, but going to 43, that puts you closer to the 40, 26, 260, 270 short put spread if you want to go out to the one standard, getting closer to under 70% profit, giving this some room to run. Mr. Radigan, our low of 273.21 on June 5th. That Thursday, that's when Elon Musk is accusing Trump of a whole variety of things on Twitter or X. That seems to be a low that you could work around and place a trade around. you can get a pretty decent risk to reward just under risking 2 to make 1 if you want to sell a put spread right now in Tesla.
Yeah.
Is that something you'd be interested in, Mr. Butler?
Yeah, I think it's totally in play, especially into a big move like this. But I totally agree with Dylan. I think you have to categorize some of these stocks, and Tesla is a Mag 7 stock with a lot of public interest, and a lot of people want it to go higher. So if you think about that for all these other stocks, like Apple's another one I was just talking to Nick about. Like Apple, I will 100% be buying into for earnings and beyond, just because it's like, okay, you have this massive company that's has not participated in the rally. Would you be surprised to see a rotation out of maybe a Microsoft or Nvidia into something like Apple? Absolutely not. I think it's totally in the cards. And to Dylan's point, like if you're investing, buying a couple shares here and there, I think it's a higher probability than 50%, in my opinion. But if you're trading it, you just got to be careful, keep your risk small. In Tesla, if you're going with a put spread instead of a short put, for example, if you are just protecting yourself from a continuation of this move. But yeah, I think it's when you're approaching a near low for the year, like we haven't gone really below 270-ish, like you said, for many months. If you can get down there, if you place your strike there now, you have yourself kind of a psychological floor there at the very least.
You know, one of the items that I saw that came out about Tesla, which is really interesting too, they got rid of 75% of their Bitcoin holdings in mid 2022. So even though Tesla's crypto holdings on their balance sheet grew from 722 million to 1.24 billion a year ago, that's not because they were holding on the entire time. They actually jettisoned Bitcoin near the lows. So that's not, maybe that's something as well. Either way, though, the Tesla put spread looks interesting at 43 days. We can get this queued up for tomorrow morning. I think it's worth, well, we're not going to accept, it's after, okay. So we'll have to wait for tomorrow. Either way, though, doesn't really matter to me. Tesla, the robo-taxis, we can listen to the story Musk is spinning us. Where's FSD? Still not here. But at 305, given where we've seen lows carved out, I mean, I think 270 is a bit of a floor. 270 is the floor post earnings last time. It's the June 5th swing low. It's something to work with. Let's go to the index level, though, here, Mike, because NASDAQ didn't have the kind of day that the S&P 500 did yesterday. Today, it feels like it was a little bit more catch-up after Google. We're just hovering below all-time highs. Our friend Dylan Radigan here has been egging me on to get back long the market, which after a brief 2-day reprieve as sitting on the sidelines in the NASDAQ, I did jump in yesterday afternoon. Am I right to be looking long here, or am I crazy with the NASDAQ at 6.4 negative IVR to try to chase this up for the final few seconds?
You know, it looks scary to get long here, but all you have to do is drag that, click and drag the right axis, bring it down. There you go. Now you got plenty more room to run.
Oh, this market's been flat for a few weeks.
Oh, we need Mike.
Why didn't I think of that myself?
No problem. Thanks, Mike. There you go.
But no, to answer your question, I think it's hard to believe that the market will continue higher. I mean, but at the same time, if you look at the VIX, we're in the 15s again, and we've done plenty of research on this showing that when we get to these mid to low teens in the VIX, it tends to stay that way for quite some time. And if it's staying here in the 13, 14, 15 range in the VIX, I have to assume that the market, while it can still have choppy days and sell-off days, the general consensus in a low VIX market is up and to the right. So I think, again, you keep your risk small, you pick your spots if you're trading options, if you're looking to get into shares, like maybe you're trying to buy Tesla, like today's obviously an 8% sell-off in Tesla. So I think you keep the risk small still, but yeah, I'm playing for up and to the right until something happens. But this is also a point in time where my options positions are very small, and I have a lot of cash on the side waiting for something to happen. So
what are you waiting for, Mike?
I don't know. I'm still playing it to the upside in a lot of these stocks, but I just layered on a downside diagonal and SPY, but that's defined risk. And I have a lot of other bullish positions that would offset that. But maybe it's next week's earnings. We have a ton of earnings in a lot of these big name stocks. Maybe one or two of them just completely fall out of bed and sell off aggressively, but we'll see.
Mike, this was the research that you were mentioning. I haven't actually updated this on my end, so technically this is through July 30th of last year. But you talk about like what's the optimal strategy in these markets. When the VIX is between 10 and 15, being long stocks produces a lower volatility of daily returns and a higher average daily return than being short a strangle. So if we talk about a market where volatility is low, volume's low, right? You kind of just set a trade on at the money calls, a little bit out of the money. You're long the futures. You're just long the index, right? And then you go fishing. It is that playbook. The only thing that really bothers me about that all happening is, and I do need to go to Twitter here. I can't help but feel like there are some signs of excess in this market today. Guys, an Ethereum rock sold for $300,000 today, 82.4 Ethereum. Now, yeah, that's probably money laundering or a wash trade or something. Okay, but we also have CTA positioning for U.S. equities in the 90th percentile right now. And if volatility follows its typical seasonal path, this is a 20-year average of the VIX, this is about the time of the year where volatility starts to trend up again for the next 3 months. So, Mike, when I say I feel like I'm chasing this thing higher, Icarus flying into the sun, Ethereum rocks for 300K, 90th percentile positioning, and VIX seasonality around the corner. It does make me nervous. It makes me nervous being long in this market.
That's fair. Totally fair.
Dylan, why should I ignore all those stats for nerds?
Enriches the wealthiest people in America to dump billions and trillions of dollars into assets and drive them higher at the same time as inflation rises, which only supports equity prices and the collapse of the U.S. dollar. I think that the primary risk of the Trump administration resides in the currency, and I believe that the primary benefit of the Trump administration resides in the stock market.
Well, S&P does continue a little bit higher here today. It's only by 0.11%. The Nasdaq's up by 0.34. Mike, the Russell was really weak today after it looked like it was about to break out yesterday. Do you have any good rational rhyme or reason why the Russell here is there a way to cover the divergence, right? Should Russell outperform the Nasdaq moving forward? Is that the trade or is that dead?
I'm not sure it's alive. I mean, if you look at the watch list, the Russell 1000 or just any of the Russells, you can look at the microcap, the mid cap, but you can see the net change on a handful of products are over 10% to the downside today. So it's being dragged down for sure. Likely Chipotle plays a role there. They had earnings and they're down 13%. But yeah, I mean, when you look at the Nasdaq, the shiny thing that everybody wants, the AI stocks, the traditional tech stocks, I mean, it's hard to, and I think that even creates even more pressure to the downside in something like the Russell, because it's like, well, why would I want to be in these other stocks when I can be in NVIDIA, Google, Microsoft, Apple? I think it's a harder sell to be in those products when you have this new revolution in AI kind of pulling the NASDAQ higher, pushing the NASDAQ higher.
Something to keep an eye on here. Donald Trump has arrived at the Federal Reserve to take a tour of the Marina Eccles building's renovations with Fed Chair Powell. And apparently they are bickering in front of the press right now. So one thing to keep in mind about these comments that are coming out here, the Federal Reserve is in a communications blackout window right now. Policy officials are not allowed to comment on monetary policy. So if Trump gets up there and starts saying that Powell needs to lower rates, Powell needs to cut rates, he's too late, Powell's probably just going to sit there and take it. You can't really argue about the state of the economy at this juncture. But it's an important visit, Dylan, because it's only the fourth time in history that a Fed chair has visited the Federal Reserve itself. FDR, Gerald Ford, George H.W. Bush, and now Donald Trump. Is this a unique event because it's the fourth time? Is this the paradigm shifting? Are we in a new world order now? Or should we ignore this?
New world order as it relates to what?
Federal Reserve independence is dying?
I mean, not yet, but I think that the agenda of the executive office is to take over the central bank, to take over the media. I like the idea of just letting Trump take over everything. Just let him use weaponized security to kill whoever he wants. Let him control the central bank, and let him control the media, and just see where it goes. Like, why bother resisting at this point? I think it might resolve itself more quickly if we just let him control everything.
Are you sure you didn't watch that episode of South Park last night?
No.
Are you sure?
But I just say you just let him rip.
Mike, my low stakes conspiracy is that Trump's going to see last night's South Park episode and he is going to bring about all sorts of AI regulation to the space.
I mean,
that could kill the NASDAQ rally.
What was the poly market on whether he would mention it or not? What did it end up at? Strong number?
Does the chat know what we're referencing right now?
Maybe not. Maybe not.
There's a 0.0% chance that I'm ever going to watch the South Park episode. So if you just want to paraphrase it for our mutual benefit, I'm happy to sort of.
I like my job here, Dylan. I like my job here, Dylan Radigan.
Okay.
Let's just say it wasn't positive. It wasn't positive.
It wasn't positive as it relates to what?
As it relates to Trump. But
Thomas Westwater was asking me, he's like, "Oh yeah, I can't wait to watch this. I'm going to watch it on the train ride home." And I said, "Thomas, you should not watch this episode on the train ride home. you might get people might start asking questions on the train ride home.
They might send the armed security to run the interrogation on you.
He might not be allowed back on the train for a little while if he watches content like that." All right, so we have a chart here in notes and bonds where there's a little bit of recovery at the long end of the curve today. It's interesting action where instead of short end rates sticking or falling and long end rates going up, that's kind of the opposite of what occurs. Mike, I don't think that we are conceptualizing any chance of the Fed cutting next week. Do you have any strong feelings on the Federal Reserve meeting on Wednesday, July 30th?
I agree with you. I think there's a 0% chance that they cut rates. I've been saying, like, prove me wrong. Like, show me a cut. I don't think we're getting a cut this year. We're projected to get 50 basis points. There's a 42% chance that we get 50 basis points by December. But the probability of doing nothing has been just increasing every single time I look at this thing. Like, even in September, we were at a much higher probability to get a 25 basis point cut, and now we're at a 40% chance that we do nothing again. So I don't know. Show me a cut if we're going to get it, but I feel like they just continue to kick the cut down the road.
Is that a problem for stocks, Dylan, if the Fed doesn't give us a cut in July or September?
Yeah, I think it is. I mean, I think that the market is expecting, I think it's pricing and anticipating rate cuts in the fall. I think that the confidence of that expectation was meaningfully diminished by the June inflation numbers. The CPI and PPI were horrendous. And so I don't think they're as expected as they were before the PPI and the CPI came out. But I do believe that there are strong expectations for rate cuts in the fall. But I think more than that, I think there's expectations that whatever happens with tariffs will be relatively moderate. So, I mean, I think the biggest question right now, and I think that the stock market is still expressing extraordinary confidence. I mean, you saw the sort of extortion racket that Trump announced today, where he said no European luxury cars will come to America unless the American drug companies reduce their prices. Some sort of convoluted effort to pressure, I guess, European drug makers to raise their prices, I think was the solution there.
I think that's the solution. Yeah.
It's like either fuck the Europeans or cut American prices, excuse my language, or it's some sort of mafia logic where it's like, at least we can destroy Europe even if we can't save ourselves. But I guess my point is that whatever comes out of the negotiating table in Washington, I'm always impressed by the stock market's relative confidence to hold its value, and basically the stock market's relative indifference to whatever Trump says. But I do think that underneath all of that is some expectation for a rate cut at some point in the near future.
I'm seeing a tweet here that Trump punched Powell, but that can't be true.
Not everything on the internet is true. A lot of it is, but not
Is
everything.
anything on the internet true, Mike Butler?
I think there's a handful of stuff that's true, but Twitter,
like a broken clock that's right twice, kind of thing.
Yeah.
Just let that play
man.
there. They look good in their hard. They look really good in their hard hats. Touring the building.
I can only imagine the tension between the two there. But yeah, I don't know. I feel like give us a rate cut if we're gonna get one.
Sorry, is Senator
How can I give you a rate cut when they've got tariff-driven inflation?
I don't think they can. I don't think they will. I think they'll just keep pushing it.
You don't think it'll happen this year at all? Do you think that that's a reason to sort of be less optimistic for stock price? In other words, if you really think there's no rate cuts in 2025, don't you think that means that both the bond and the stock market are incorrectly priced at this particular juncture?
I think it could be a reason for the market to come down a little bit. Yeah.
So,
man, it's tough to be Chris Vecchio, I tell you. The poor guy. He just wants to get short on his birthday, go to the beach. He's got babies. He's got a nice bakery in town. He just wants to have a cinnamon bun. And he's stuck in this conflict because he's got me just tweaking him. I'm like, come on, Vecchio, we can do it. But I mean, all we got going for us, brother, is the Trump legislation, which is not nothing. But if Mike Butler's saying the rate cuts aren't going to happen, and now the tech earnings are behind us, and even the Musk guidance is lousy, I mean, maybe we're on the wrong side of history here, sir.
Being long, we're on the wrong side of history?
Yeah, for the summer. If we're not going to get rate cuts, if there's going to be tariffs, tech earnings are behind us, inflation is back, and all we got going for us is the biggest tax giveaway to the rich in the history of the world. I guess my concern is if Mike Butler's right and we're not getting rate cuts in the fall, I think that's a problem between you and me and everybody else watching this podcast.
In 2024, we enter the year with expectations for the Fed to start cutting in March, right?
Yeah,
sure.
We didn't cut in March.
No, we didn't.
That got pushed to June. We didn't cut in June.
That was a problem.
And in August for like 5 days.
Mm-hmm.
Right, and then we rip off that August bottom, and then the Fed gives us 2 cuts in September. But we didn't. There wasn't a problem for the market, and the market at the end of June was closing on the highs after 2 big meetings, the quarterly meetings in which they produced the summary of economic projections, didn't give us a rate cut, even though we were expecting one several months out. I think the context matters, right? If the Fed comes out and says, listen, inflation's still sticky, the unemployment rate is 4.1%, and the economy is still growing north of 2%, this isn't an economy that we need a cut into. I don't think the stock market's going to look around and go, well, corporate earnings are holding up better than anticipated. Consumers are still consuming. I don't think that we care about the cuts, honestly. I don't know personally. Have you guys been investing in the stock market or trading long stocks on the basis that the Fed's cutting rates soon?
No, but I look at the rate cuts as an indication of the underlying macro expectations for the cost of capital in a way that is supportive. Does that make any sense?
Sure.
That there's a tailwind baked into the whole situation of rate cuts this fall.
Okay. So then is the risk over the summer? If we know that the Fed's not going to cut in July, Mike, and we know that there's not a Fed meeting in August, then doesn't that make the risk not just for seasonality and the VIX to go bump because it's now the 8th month of the year, but because we have a trigger. We've been waiting for these cuts. We have 125 basis points priced into the end of next year to be cut. And we have to come to the realization that money's going to be more expensive, and than Ilya and people like him will be okay.
He's foaming at the mouth, I'm sure, if he's listening. Maybe he is, maybe he isn't. But yeah, I mean,
I hope he is.
If you look at some of so we had a couple of earnings come out. So Texas Instruments, random name, but they dropped dramatically on weak earnings outlook. Chipotle, same thing, weak future forecasts. And then IBM, same thing. So we're kind of seeing some of these companies either make revenue and have a weak forecast, or miss revenue, have a weak forecast. We're seeing weaker forecasts down the road. Do you think this is kind of pricing in everything we're talking about? And maybe all it takes is a couple of big name Mag 7 stocks to really have a bad earnings report next week, and that kind of starts the tumble.
Right. Well, the real issue is the guidance, right? I mean, to your point, that was the exact point you were just making, which is if everybody's going to guide lower consistently and meaningfully, and you're not going to have rate cuts, now all you've got is a tax giveaway.
And all you got is the tax giveaway. The bottom 80% don't see the significant amount of tax hike, if you will, from loss of services and the change in rates that go across the board. That's not going to really bite until the end of next year. So, in fact, if you think about the politics of it, really probably good timing for the midterms for Republicans, all things considered. The bite doesn't happen until 2027, at which point the midterms are over. So for a lot of folks who are going to say, oh, yeah, all these cuts are coming, your cost of living is going to go up because you're losing Medicare, Social Security, it's not going to be wound down as quickly as some may be suggesting it will. Is there a Jack Welch angle to all these companies, though, Dylan? This is your stock prices.
There's always a Jack Welch angle, which is guide lower and beat, guide lower and beat, guide lower and beat.
But why not just throw the bathwater out right now? Like, just get all the bad news, guide lower now before the tariffs come. It's a freebie, right?
Look at that IBM chart.
Well, IBM had a run. Yeah, it was up from 213 to 295 in the span of 3 months. I mean, if I'm an executive, what juice do I get from guiding higher right now? Like, I have to be really confident in this environment to say I'm going to guide higher. And if I have any uncertainty, I can let my share prices take a haircut for a little bit. I mean, Texas Instruments is down 13%. That's not nothing. IBM's off. Texas Instruments was off 30% yesterday, so that's not nothing. But it's back to where it was trading, 6 weeks ago at the beginning of June. That's not exactly world-ending for the company. And if they now ride out this third quarter and the tariff costs aren't materialized, they're not going to beat on everything. They've just lowered the bar for themselves. And it feels like there's, as we've been discussing here on the show, there's 3 stages for how companies are going to handle the tariffs. First, they're going to kill all their, they're going to try to supply chain manage. I absorb some of the costs, you absorb some of the costs. Second stage is where they kill promotions, sales, price matching. Target did that this week with Walmart and Amazon. Third stage is the revenue management, right? So now you've lowered the expectations for everyone. You remove the deals, right? The market's not overcooked on your outlook. Now you start to raise prices. Hopefully volume doesn't fall off too much. And now you've kind of like insulated yourself from the tariffs to a certain degree. Expectations management's part of that. So I don't know. I look at a Texas Instruments. The 4.9 IVR doesn't make it any sort of appealing to me. But the fact that we're sub 200 again, approaching 175, there's a little bit of a gap here in the low 170s. This is an interesting opportunity for a company that's been very, very strong. Share prices, up 30-something% from the low. That's not for no reason. I think there's a game of chess being played is what I'm saying right now. Because there's no incentive to say that you're going to have a great quarter with the tariffs coming. It's one way to lose your job.
And I kind of like. I mean, I'm not silent for no. I'm reflecting on your logic, which is Because basically what you're saying is this is just more reason to be a bullish. Because not only do you have the super tax break, but you have an incentive for the top 100 CEOs to be as negative as possible coming out of the June quarter because of the tariffs, to try to reset their equity price to perform well in the second half.
Yes.
Mike Butler, what say you? Seems pretty logical from where I'm sitting.
If you parlay that with the Santa Claus rally, now we're talking.
Yeah.
Because at the end of the year is always, you always hear those sleigh bells.
That's Trump's thing, right? Didn't we all say, oh, yeah, now that the market's back up, Trump's going to feel like he can play fast and loose with tariffs a bit more? He wasn't feeling that way in early April after they went into effect. The bond market's getting yippy. Now the stock's at all-time highs. Like, okay, he's playing with some house money right now. If the stock market goes down 5 or 10% from here, in his point of view, like, okay, so we're still higher than we were when I was elected. He can still spin that. Why wouldn't CEOs have the same approach? This is free money. You just got to push to all-time highs. Get the bad news out of the way now, lower expectations, and everything that comes after here is gravy. So maybe the call is Texas Instruments to close the year. Maybe that's the play right now. We go out to the end of the year, 148 days. No, let's go beyond there. Let's go to 176. A return to, look, we can take a move back to where we were last week. 176 days out, risking 1 to make 4. That's really cheap, Michael.
It's not expensive.
You're going full Michael, huh?
Yes, Dylan Fur. That's what I do when I'm serious around here. I give full names, no nicknames.
Yeah, you're going full Mike. You're like, I really like this trading position, Michael.
It's the same thing with BT. Well, the same thing with the BTU position. When volatility was on the floor, looking for an out-of-the-money play to go back to basically where we were around Election Day, 176 days out a few weeks ago, it kind of felt like a little bit of a layup. And that's working well right now. It's still a 9 to 1 risk to reward, Dylan. But when we have these volatility contractions and some of the big names have come back in, if we're in the process of reducing our capital exposure into the market, as Mike and quite frankly, as I've taken into my own trading style, having listened and learned from some of these other more options-oriented folk around here over the past few years. But when it's really sunny like this, it doesn't mean go lay out in the sun. It means it's time to go inside and get hydrated. You take some trades off the table. You start getting your capital dry so that when the volatility storm eventually comes in, you're prepared. And if in the process of reducing equity exposure, it's like, let me punch a few lotto tickets around here just to have in my back pocket some longer term ideas. I don't think that's a bad way, a bad approach, especially if you're going to step away for a few weeks, by the way, which is we're in that window now. I could tell you here, we have this thing in town where basically the first 2 weeks of August, no one plans any community events because just no one's around. It's not even worth it.
Where are they going?
Just traveling, right? It's kindergarten orientation is like the 3rd week of August. So families like to do their travel before then, apparently around here. And just thinking about that, schools are starting soon, right? Most schools go back into session mid-August, early September. This is a period of time where people may want to take capital off the table. And if you want to take capital off the table because you're traveling, you're going to be on vacation, you're just taking time off for work, and you don't want to worry about the market, longer dated exposure if you still want to have skin in the game. Don't set yourself, right? Dylan, Mike, I don't know if you guys do this. I sometimes go on vacation, but I have a trade on, and then I spend my entire vacation day looking at the market.
Misery.
That's the sickness.
Pure misery.
Yeah, you and Nick are the same. Nick's like, I can't disconnect, and I'm like, I don't even know where the market is right now because I'm fully disconnected, enjoying this beer in Scotland. We went to Scotland last year, but
nice.
Yeah. And apparently you had beer.
We did. Many tenants. Strong beer out there.
Sure, it's a fine beer. It's a fine nation or region. How do you feel about Scottish independence? You have an opinion there?
I don't. I'm not informed enough. What's going on
But
there?
You're good with the beer.
I am.
Dylan, you don't think that I have an opinion about former Scottish Prime Minister Nicola Sturgeon on the
I mean, do you have an
failed-
opinion on Scottish independence, Mr. Vecchio, sir?
I'm absolutely all for Scottish independence.
And Catalan independence?
I don't care as much about that because we weren't a vestigial state of Spain, but we were a vestige of England. I think that's as far as I want to go, given who our parent company is.
But once you spring Scotland, you got to spring Catalonia.
Yeah, why not?
And once you spring Catalonia, you got to spring Bavaria.
Bavaria's got to
Which
go.
would be
Yeah.
southern Germany among friends.
Rejoins Austria. Got the Austria-Hungary region going.
City states.
Oh, bring back city states. Okay.
Munich will run the operation in Bavaria.
Mm-hmm.
Barcelona will run Catalonia. Edinburgh will run your Scottish Empire. And once you free Scotland, the Catalans and the Bavarians, you only have one choice, which is to free the Lombards, because they're bankrolling the whole lazy state of Italy. So then Milan's going to have to spring loose. And then you'll just have a few small, extremely wealthy nations, and everybody else can eat dirt.
Am I rooting for Scottish independence? No, I got mugged in Scotland once, so I have mixed feelings towards the country. It's interesting.
You know, Scotland is oil rich.
Is it? North Sea, of course.
Quite so. Anyway, back to our regularly scheduled programming before I totally disassemble the European continent.
That's fine.
Forgive me.
I get a lot of emails for my commentary about European ice and air conditioning on the show, although I would remind everyone having AC and ice does make us better. So you can still wear that hat. Dylan, I don't know how you guys do it over there in the summer without AC and air conditioning and ice in your drinks.
For the one thing, we actually have ice and air conditioning in every apartment, in every room in the house, temperature controlled and glorious. And so the primary way that we do it is we just actually live in reality as opposed to some sort of delusional fantasy of idiotic Americans who don't actually think that we have air conditioning, with all due respect. And so by virtue of having the air conditioning and the ice, we don't suffer any of the issues that you might suggest.
Would you like a chance?
Did I just insult Americans? I didn't mean to do that, by the way.
Would you like a chance to just fact check your stats on how many homes in Europe have air conditioners before I?
You know what? I would. It's funny you should ask. I got my phone right here. Okay. And I got my Chat GPT is one of my four. I got four things but if you look at my phone, at the bottom of my phone, I got a language app. I got to learn Italian. It's a pain in my ass. I got a travel app, Kayak, because I fly all over the place all the time. I got a hotel app, Hotel Planner, because I'm always staying in hotels. And then I got chat. I got four apps. Chat GPT. Let us find out what should the question be, Vecchio? What should I first should I condition it?
What percent
are
of
an
homes
expert. You are an expert
in HVAC.
In HVAC in Europe. I love ChatGPT. I love it. Best $20 I spend every month. Okay, so I got myself an HVAC expert in Europe. And what's the question, Vecchio?
What percent of European homes have air conditioning? Of
European homes. Butler doesn't get to hang out with fun people like us all the time in public. Hang on. What percent of European homes, this is so much better than Google, by the way, have AC? Is that the correct? Do you approve of the question, sir? What percent of European homes have AC? Stand by. Sure. Calculating, searching the web, analyzing.
This is important stuff.
Not great. Not great. The numbers are not very good, sir. I'm looking at a 7% number in my home nation state of Italy. Don't like it. Spain, they're talking 41%. I like that. UK, 3%. Shame on them.
Those are low numbers.
Man, those are terrible numbers, Mike Butler. I shouldn't open my big mouth. What percent of apartments in central Milan
Okay, but
AC.
look at this in Europe.
Okay,
Europe,
I stand corrected.
look at excess heat death in Europe compared to North America, Latin America, or even Africa. Right? Europe is nowhere close to as big in terms of population as Asia, and yet it nearly has the same number of people who die from heat death every single year.
I stand corrected.
This is not because I'm anti-European. I want our European brethren to enjoy modern civilization and not die from heat during the summer because it's too hot outside. Install AC. And you know what? I'm glad this is becoming a really good topic. This was published 2 days ago. The new hot topic in European politics is air conditioning. We're making progress here on Overtime, Dylan Radigan. The jihad continues.
You know that air conditioning is a number one issue with global warming because the electricity, the amount of carbon emitted to produce the cooler air is actually creating the thermal insulation that is thus causing a warmer environment. So there's a negative feedback loop between the rising temperatures and the carbon load that is being produced to do all your fancy air conditioning because you're some big rich fancy American with your big bakery and your summer vacations.
Well, I would quote Singapore's founding father, Lee Kuan Yew, who considered air conditioning one of the most important inventions for all of civilization, saying, quote, "It changed the nature of civilization by making development possible in the tropics. Without air conditioning, you can work only in the cool early morning hours or at dusk." And obviously, the first thing he did when he took over Singapore was he installed air conditioning in all government buildings. And Singapore is what it is today for decisions like that visionary had. So bring AC to Europe, Dylan.
And the Earth, by the way, is at a carbon load and an average global temperature that is the highest it has ever been, as a result of all your fancy air conditioning just jacking the atmosphere full of carbon. So thanks for nothing, pal. Why don't you get a fan? Why don't you take a walk? Why don't you wake up a little early in the morning and have a cup of ice water?
Dylan, I did wake up. I woke up at 4:15 this morning and couldn't go back to bed, and so I watched the new episode of South Park. And then at 5 o'clock, I tried to go back to sleep.
Did you?
And I had these AI images of Trump wandering through the desert seared in my brain. So I couldn't go back to sleep.
Okay, so why don't you tell me about that South Park episode? Because right now I'm in a beautiful room full of air conditioning, so I'm very open-minded and ready to hear any new information that might help enlighten me and give me a better life.
Guys, I think that we just made Dylan. I think we just made your shoe company all of its money. All of your shoe stores have air conditioning and serve ice water with like those little cucumbers in them.
Are you coming to Fashion Week in Paris? We're going to run just pure air conditioning and ice water and really expensive sneakers. Plus, you got to buy a plane ticket to Paris. So it's not a great deal, but you get a fine shoe.
Oh, well, I'll look into it. I'm sure my 30-week pregnant wife would appreciate if I just abscond to Paris for a few days.
She'd bring her. One lady doesn't like a weekend in Paris. Show me a woman who's not happy to have her.
She's in grad school right now.
And charming husband, such as yourself, to take her to Paris for the weekend to buy some fancy Italian shoes. Come on.
Dylan, if life were so easy, I'd be there right with you.
I mean, once you make all that money on your Tesla long position, I don't think it'll be an issue.
Yeah, I'm a corner Tesla. True. Mike, what's your view on the metals up here? Dylan and I have been chewing on this for a few days. We haven't heard your thoughts recently. Gold, silver, copper, go to the miners. You can go to the equities like FCX, dealer's choice.
Yeah, I've been trading the gold butterflies consistently, and we're about to have one roll off. I had a put butterfly on the downside that I sold for $250. That should expire worthless. And then I have a gold and the V contract, a iron condor there that's up a little bit, but just kind of playing for more chop here in this range. It hasn't left this 200-point range in many months, so I'm just playing for more of the same.
Come on, Mike Butler. I mean, how often do you even join us? I need a definitive point of view on gold and silver. My boy Vecchio has jacked me into the silver position time and time again.
Well, silver
usually to my benefit.
Yeah,
usually to my benefit. Usually to my benefit. I have to be honest. For the first time in my life, I want to buy gold. But if Mike Butler doesn't like it, or should I say Michael Butler doesn't like it, I'm not sure I can go forward.
No, I like long precious metal. I like long gold, long silver. I think if the story is, and if you believe that the dollar will continue to be devalued, then you want to have these assets even if they're at highs. So I've just been playing
Let's take it another step further, Mike Butler. Do you believe the U.S. dollar is fucked?
Eventually it will be, yeah. When you leave
as a PG-13 program, we can say that once on air.
Okay, I'm sorry, but I mean that is a correct opportunity to use the phrase, sir.
But yeah, I mean when you
sorry, Mike.
When you think of how inflation is not going anywhere, and if you leave the value of a currency in the hands of human beings, it's going to get devalued over time. So yeah, if you're looking for something.
Over time, we're down 20% in 6 months, brother.
I know.
I mean, this is not overtime, nothing.
Yeah.
It's a disaster.
It's not good. It's not great. But yeah, I think Bitcoin, gold, silver, those are nice assets to have in an environment like this.
How about a little dollar bounce, a little something for a friend? Maybe somebody earns dollars and lives in Europe. Do you care about him?
I do. But yeah, it's been tough. I've been trying to buy
that much apparently.
I've been trying to buy the dip here in the dollar too. I'm trading the tastyfx currency pairs. I'm short the Aussie dollar. I'm long the dollar franc. I'm long the dollar shekel. I'm short the euro dollar. So I'm right there with you.
Okay, so you
just
at least you feel it's. I mean, my man Trump has really got the dollar by the neck. You know what I'm saying?
It's not great.
But it's not good.
The dollar today, it tries to break back into its downtrend from the February and June swing highs. It doesn't quite get there, though. I mean, if we were back under 97 during the show, we would say that the bounce is dead. There's no more hope. All hope is lost. We're going back down to the yearly lows. Hide your kids, hide your wife, yada, yada, yada. Best laid plan. Yeah, exactly. Call your mom, tell you love her. But that's not this. Even the yen, which has been a thorn in my side this week, we go back to that daily chart, the past 3 days in a row, trying to push to the 1 month, and we're closing below it every time today. A nice little reversal candle there, so perhaps this is something to work with now moving forward. Volatility is really low. That's not the case, though, in the euro or the pound, where volatility is higher. So I suppose for typical tasty traders, Mike, if we're looking at the currency futures here, you have your euro, your pound, even your Canadian dollar with IVRs that are right near 50. That's more of the typical selling call spread, selling put spreads, short iron condor, short strangle viewpoint. I myself think that if we're going to be directional in the dollar, you want to do it in the low volatility products to buy something a little out of the money. So I'm still playing for 0068, 0067. I'm not enthused, but the dollar short is still among the most crowded trades. And so thinking about the second half of, not this week, we're already in the second half of this week, but the remainder of this month, long gold, long mag 7, short dollar are still the three most prevalent crowded trades, according to Bank of America Fund Manager Survey. So at some point, something's got to give, at least for just a small bounce and rally.
Yeah.
Dylan, quickly here, is the dollar story, is this the main thing to watch as the barometer for Trump? Forget the bond market, forget stocks. It's currency.
The dollar is the referendum on America through the lens of the Trump presidency. It's not the stock market. It's not the bond market. It is the dollar. And the dollar is... not to use a previously used word because I've used that word. So the dollar is in decline, and it is in severe decline, and it is a notable issue that is a direct reflection of a collapsing confidence in the relevance of America. How about that?
That's fair enough. So we've covered gold, silver, dollar. We've talked stocks, a little bit of bonds. We've talked some earnings here as well. We do now have the video of President Trump giving our Fed chair a hearty slap on the back here as they wind their meeting down. I love him to lower interest rates and gives him a slap on the back. Markets don't care because Powell can't say anything. Maybe that's the good news for tomorrow, guys. Trump didn't go to the Federal Reserve building today and fire Powell. If he really wanted him gone, wouldn't he just do it there and then? Maybe he's not getting fired ever. I personally don't think so. This whole story is so ridiculous to me. The funding overrun for the building is a pretense to get rid of him. Come on. It's the worst. It's the lamest thing I've ever seen. Dylan, I want you to take us out here. Give us something to talk about for the last 5 minutes that's been on your mind that I haven't.
Like I haven't said anything already today. Listen, I mean, you're really putting the burden on me here, but I'll tell you what. America is a demographically and economically dominant nation. I do not believe the dollar will collapse. I do not believe the dollar will decline significantly from here. I do not believe Donald Trump represents a material risk to the future of the country or any president. And I do believe, I like the thing that I most enjoyed about today's program, which is a thought I hadn't had previously, was your comment that you believe that there is an active and dynamic indication of sentiment from the giant company CEOs to portray their expectations as cautiously as possible in order to endure whatever equity losses are available to be had now, such that whatever happens in the third and fourth quarter, that it is seen favorably. I think that is actually a positive for the market overall. I think that the fact that there is an incentive coming out of the second quarter for the big bosses to come out and say, listen, it's a mess. I can't make any promises. You never know. My God, I don't even have air conditioning in Europe. whatever their comments are, is really just a pretext for a more optimistic environment. So I think that that's probably the most optimistic thing that I heard in the last hour of discussion. The most concerning thing was from my good friend and neighbor, Michael Butler, who can frequently be found drinking beers in Scotland. I don't know about frequently, occasionally be found drinking beers in Scotland. And he is rather ambivalent. No, he doesn't think, I would even say, does not think that we are necessarily going to have rate cuts this fall. And I think that rate cuts this fall are sort of taken for granted. And so the most optimistic thing that we're sort of dealing with right now is the possibility of lowered second quarter guidance setting up rallies in all of these stocks because of the little beak pounding that they're going to get coming out of these second quarter calls, with the most negative dynamic being the absence of rate cuts in the fall. And I would like to note that according to ChatGPT, 55% of the apartments in the city of Milan where I live do have air conditioning. And so I live in a small pocket of air-conditioned air in a continent that is absent this very thing. And so don't hold it against me that I'm sort of stuck with the cognitive bias of my own lived experience, and so I'm oblivious to the lack of air conditioning in the very nation state that I reside.
Mike, we have 2 minutes left. What's grinding your gears here?
Not much. I would like. I would like.
No problem. This guy's no problem. This guy.
Yeah. There's no problems.
Why do you feel so? How about that? Let me rephrase, Mr. Vecchi. Then why do you feel so good about the world, Michael Butler?
I'm just an optimist. I think I like to look at the good side of most things. But no, I think I actually do agree with everything we've said here in terms of maybe these companies accept a little punch from earnings just to set themselves up for outperforming later. But yeah, I don't think we're going to see rate cuts. I'm going to stand on that. I don't think we see a rate cut this fall. I think we
doesn't that mean dollar buy? Doesn't mean you like the long dollar. If you're not going to have rate cuts, isn't that dollar positive on the margins?
I hope so, because I'm aggressively long the dollar in a myriad of different ways. So we'll see. So I guess that's my thorn in my side, the weakness of the U.S. dollar. That's what it is.
Weakness of the U.S. dollar. You know, we've lost a lot of celebrities this week. This is what's bothering me. The one
The
today.
Hulk Hogan situation, that hurt me. The Ozzy Osbourne, and we got all kinds of problems.
Yeah, the Hulk Hogan one in particular, like as some may imagine, his and I, our politics don't line up, but I had the pleasure of meeting him once in person. My brother grew up a Raiders fan. I have no idea why a kid from New York grows up a Raiders fan, but he was
Al
begging
Davis, come on, Howie
Yeah.
Long.
Yeah,
Those
my
guys
brother,
were awesome.
my brother
Marcus
born
Allen.
in 1991 was thinking about Al Davis and Howie Long.
I don't know. Maybe like their uniforms, bro. Pirates, black. I don't know.
Well, the farthest east or the furthest east they were playing over the next 2 years was Indianapolis. So my dad flew my brother and I out there for like a dad-son trip to go see the Manning Colts take on the Raiders. And when we were standing in line at Indianapolis Airport, Hulk Hogan was in front of us. And he was massive. So he let me do some pull-ups off of his arm. He signed some autographs. He chit-chatted with my dad for 15 minutes. One of the nicest celebrities that I've ever met. I've met a few. Run into Amari Stoudemire at a club in New York City, bumped into him, spilled a drink on him. We had to buy him a bottle for his table. It was a whole thing. But Hulk Hogan was a nice guy. So rest in peace to the guy who brought
He was a good man. Hulk Hogan was one of the greats. Come on, rest in peace, Hulk Hogan. We love Hulk Hogan. Come on.
With that, overtime's out of time. We'll be back Monday, same time, same place, as always, right after last call, 4 p.m. Eastern, 3 Central. So for Dylan Radigan in Milan, Mike Butler in Chicago, I've been Chris Vecchio in New York. Good luck trading. See you soon.